Well, good evening. Whoa, what a wild day. I'm Ira Epstein with your metal market wrap up, and this wrap up is for Monday, the 7th of April, 2025, about 6:10 p.m. Central Time. You know, one of the things I wrote in my newsletter and tried to explain to people, I thought today was going to set itself up that the bottom pickers would come in after, you just heard what I said, after the margin calls hit the market and they took things to crazy levels. And then I wrote in the letter that on the rallies, you got to use very tight stops moving up. You don't want to hold anything. You want to be in and out and no more. This is not a position taking market. That was my weekend motto to all my subscribers. I don't think it was too bad. I think it did just what I said. So why don't we see what we've got here? The gold market is struggling to hold not 3,200, not 3,100, but 3,000 an ounce. And this is a rally tonight of $28 an ounce to get back to that number. The silver market has made a statement. $28 is too low, so it's back to the $30 level. Copper went down to $4. It's come back already about 8 to 10%. I'm laughing at it because that's the swings you're getting. I mean, tonight you're up $2,700 in one contract of copper. This is a $2,500 move if you're trading full-size contracts here, $2,800 in the gold. If that's your cup of tea, it's wonderful. If you're risk adverse, this is not the place to be. Calm down. You wait your turn. That's what will happen. You're up a little bit in all the energies after they really crack these hard. When you look at my financial update, you'll see, because I'll be covering it there, and they've taken the safe haven of bonds and notes and they put it to the screws today and took those traders out. So you've had a rotation in this market that has taken the metal traders up and then down pretty hard. You then did the same today, finally, in the bond and the note market. The stock market's been in a washout phase that today's action, believe it or not, is the first sign of an attempt of its stability in the market. You might think that's a crazy statement, but I don't think it is at all. It's the first play the market is doing. We'll see what the dollar does. It was up 20. Tonight, you're down a little bit in the euro. You're down in the Swissy, the British pound, no longer saying that the 131 level is viable. You're all over the board. And that's because we're at the eighth of trading for all purposes. This is now April 8th trade date. The 9th is where the next tariffs come in, and the president is setting everybody up every which way. I will cover that in the financial update. Let's just keep things here that way I don't have to repeat it in each of my videos. When we look at the gold chart for the week, you're down 2.41%. So we're one full day of trading and an hour and 10 minutes in. And that's where you're at on this for the week so far. You can see how the market has let go. I mean, you went from 3,200, and I think you can see what I'm saying. Today's low in the market, to give you an example, was 29.70.40, and you closed right off the lows. Remember, the settlement time in the market is at 12:30 p.m. The market trades another 3.5 hours. That's why you often get bounces and craziness in this. But this is such a big move in such a key way where you finally had this whole rally. And now where are you? You've retraced about 50% of it in 3 business days. That's what basically took place. The market has a pattern of a higher high and a lower low. Where's the neutral zone is what I want to know. I was telling you last week that the 18-day average of closes, let's go back to that so you can see what I was talking about. I said if the market's going to hold and not break the trend, it cannot afford to take out the low right here, and the first support, in theory, should be around that 18-day average. I wasn't too far off. By the end of the time there, you did close $30 under it. And on this day, you broke through that low. You've broken the uptrend. That does not mean it has to fall apart, but it also doesn't mean you're in an uptrend anymore. Got that? You saw the very next day, and this was today, where the market drops down rather dramatically and you're getting a bounce. So still neutrality on the chart. will be the 3070 level. 3071 is how I'm viewing it. Is the market trending now? It is not. It's out of an uptrend. Where might the support be? Oh my gosh. All week long, I tried to tell you, go to our website and take the course on Bollinger Bands. And I explained as best as I could that you have that number before these prices make a run, where in theory, the support from this algorithm should come in along with the resistance. I've also taught you that you always pay attention to you coming out of a narrow range or a wide range. Which one? Very important. And as you can see, it was wise. The market made its run to the lower band, and that's where the break tried to stop. That's all that you can say. Are you oversold? Yes. Another key element. Before this market let go this way, I teach it with momentum. Now, my slow stochastics will not look like yours. I modified the program. I only give the formula to my subscribers, but you can also use my suite of all this. If you're in TradingView, go to iraepstein.com and under Client Resources, sign up for it there. We'll turn it on for you. Right here, when you lost the bullish embedded reading, unless it's regained the very next day, the odds are the market's going to go to at least the neutral zone, the 18-day average of closes, which is exactly what occurred. Now, the momentum is down. You're out of an uptrend. Market, if it wants to fall, this is the only next target on this chart that I have up at this point, and that's just what you did. Now, what about the gold-silver ratio? So you went up here to the 103 area, and you're pulling back a little bit. That's all you can say. You cannot say that on a trending basis that silver is stronger than gold. You got up to the highest high and you backed off is what you can properly say. When we come to silver, there's nothing more than this. If you have my morning subscriber video, this morning, I started off all of my subscribers by pointing out a few things. Number one, you did not have a downside breakout. You took out all the key averages. It's your first big day under, and the word is underneath the Bollinger Band. Markets only stay under Bollinger Bands or over them 5% of the time. So I'm expecting that the market is going to try to fight to get back in the band. Today, the market, where's the rally high? All the way up here. Where's the band? Right there. Tonight, what are you fighting at? Markets try to stay within those bands. That does not mean the market's a buy when it's outside of it, but it also means you don't panic and you want to go short underneath it. Wait for the market to at least get in the band as a minimum. You're oversold. The resistance is where the prior theoretical support was. It was no longer theoretical when you come here. The green line, the 100-day average, and the gray right here, not the black one, the gray line, the 200-day average, did work to offer the support to the market the other day. Again, if you don't agree with that, then you need your glasses fixed. And the panic, of course, set everything off. Now, why did the markets in part panic today? In part, it's give me my money. I've got to own other things. Give me my money. I want out of the market. I'm getting killed in a position I shouldn't have stayed in. Blah, blah, blah. The more pro trader, if they're short, and I don't know if they're short or not, they see that you're out of that Bollinger Band. It doesn't mean you can't run more. The odds don't favor it. And it's like anything, you know, when you're playing on charts, you want the odds to be in the favor of the trade that you're making. Is there anything bullish on this chart? No. Not one item is bullish. Let me come back to that. You're oversold, so maybe you can call that something. You can't call it bullish, just that you don't want to maybe sell into an oversold market. You're climbing back into the Bollinger Band, and you're loaded with resistance all the way up to 33.41. That's an awful long way away. That's a 10% move the market would have to make. Copper, it fought its battle at the same way. It's trying to get back into the Bollinger Band. It's done the same thing. No difference here. Platinum, same thing. So when I did my morning subscriber video, that's not the free one you get here. It's what I give my traders at 6 in the morning. The one thing I was explaining to them was this, that I think the markets are going to fight to get back into the Bollinger Bands, and that's exactly how the day was spent. Last but not least, the dollar. Let's come to this. Let's see if I can get it to give us, there we go. My mistake. Here we come. So here we are at the close of business 30. You're under the Bollinger Band on a narrower band. Very different play. Momentum down. I can see this market still being bearish. Ideally, it'll pull back into the 18-day average. And on Friday, it pulled back into the 18-day average. Is the trend down? Absolutely. Is the market oversold? No. So where's the most likely sell zone hitting this market? I'm guessing it's the 18-day average of 103.44, which you haven't quite gotten up to. There's going to be another level of resistance at 104.09. So if you're trying to sell into this, this is where the pros are probably going short. I'm not keen on it. Why? Because you have to have a stop that's over $600 away. Even in wild markets, you don't throw away money management. If you throw away your money management tool, you might as well give up because the market's going to take all your money, 1, 2, 3 in these markets. So this is where you're at right now. I'm certainly not in the bull camp. I think you realize that. I realize the wildness that's at hand, but that's natural when a market changes. You have a change. You have a fundamental change that President Trump has brought into the American economy. It has, in turn, has impacted the stock market, which in turn impacted everything that you have an investment in, because people are always doing one thing. When the market first makes a change, people want to hold on to cash. They don't know what to expect, and that's what you have to work with. Now, when you take what we do, and you come in mornings and you join me in my subscriber areas, I do both a spider and a futures one. I do the futures at 6 in the morning. It's typically in your hand. If I can start at 6 promptly or slightly earlier, 6:25, 6:30. At 9 o'clock, I do the spider. And the reason I do the spider, not at the 8:30 opening of stocks, I want the money that's in the market, there's an aftermarket. I want that money and those positions to get divvied up, if you will, into the markets, and then I want to start talking. In addition, many of the key government reports don't come out until after 7:30 till 9 Central Time. So you put it together, you're there. 40 plus charts of spiders, stocks, ETFs, 40 plus charts of the futures. And I don't mind telling you, I've told my clients to be on the sidelines right here, and my clients are understanding it, because the name of the game is we come in as best as we can to catch trends when we can. This is a transition market right now. This isn't a trend market. This is a transition, a crazy move market for the moment. You've got your event happening April 9th. How many countries have run at the U.S. to now say, let's talk? I'll speak about that in a few minutes. Go to iraepstein.com research. I'm Ira. You have yourself a great evening.